Getting back to Boeing here. I don't see anything wrong with the pattern here. I actually think that tomorrow, if we could test the highs again, I'd be pretty aggressive adding to my position going out to the October calls. I'd say this has a, in a week time, it could move 20 to 40 points within a 5-day period. Once it starts breaking through this level, this trend line, I think we're very close to that happening. So have that in focus. Now I'm recording a little. We're just getting together here after hours on Tuesday. I'm doing a little research. I've been activating some alerts, and I just want to tell you, Paul, I see Paul in the chat room there, that the alerts seem to be working. So I'm so excited about that. So things are, but I want to talk. I want to add something to the rock bot alerts. I need to add, prices and stuff. I think it's just giving me entries. I have to see. That's what I'm supposed to be doing right now. But again, look at me. Now I'm doing a show. Well, thank you for helping me. So I am liking the Boeing. After hours, we had a great trade on Adobe. And if you get a stock like Adobe or Microsoft that has potentially great numbers to come out, but you're afraid of holding or getting options because you're going to see the pop and drop, buy some shares. It doesn't have to, it's a $500 stock. Depending on what your bank account is, you could buy up to 10 shares and get a 10-point pop on this and make a fast $100 in 2 minutes. It's not a bad trade. Because you typically get a pop and a drop. If you're gonna get a position, a reversal, it tends to happen. So if you get that, think of it this way: the reversal tends to happen. You either drop and then pop, or pop then drop. And either way, if you go long, you have a better chance of profiting on both of those. And you were talking about getting into stocks that don't have a very high, risk level, very high beta in a way that you're playing with fire. But Adobe has a long, that $500 we're talking percentage wise, a 6% move could give you a 10, 12 or 15 point move. And if you buy 10 shares, you're talking about $100 to $150 trade on these little pops like this. And this popped almost 20 points, and I got 12 or 14 points out of it. And it took me out, and I'm so happy because I don't have to worry about it or anything. So any type of stock like this, we're going to focus on that type of trade. We're going to do the same thing on FedEx, but I only got into one. And FedEx would have worked out too. Great. It went up about 50 to 15 points after hours and then slowly drifting. So both of these were, this is a good trade to have after hours, and all these get posted. So, you don't have to worry about missing these. I know it's a long day and stuff. But I'll point out as a member you take advantage of all the alerts that go out. All right, next thing up here. I'm going to pause this. Now I just checked the alerts, and we're waiting. Oh, it's time for the market. The market just opened up. We're up 250 right now. I want to switch over to the bot. And you can see the bot here. I have a long and short divergence script running, and it's running on the ES tonight. It's not live. It's live real time, but it's running on a sim account. But it's still announcing those positions, and you get to see all the results. So that's how that works right now. Right now, currently, the bot is up $287. On the 1 minute buy divergence. There were no trades. I see. Well, there was a trade on the short. Why isn't that showing up? Maybe it was a break even stop. Was it the break even? I don't think so. It shouldn't be. 1 minute short. Let me make sure they're both on the sim. Yeah, everything's good. Everything's good. Oh, that because that was a short, and that was. It should have worked. It should have paid us. Oh, it got out break even. That's why. But that's weird. It shouldn't have gotten out break even. So I got to fix that. It moved down. It should look at that. That was a perfect divergence short right there. It was a perfect divergence short. And man, it just crashed after that. But for some reason, I didn't get hit on that. Damn it. All right. I'm not worried about that. Getting back over on the screen here. I'm sorry if you on the recording did not see that. What I did was I was having a picture of the Rockbot channel. The Rockbot channel is, again, another feature of Day Trading Radio if you're listening on the outside. And that's what I was kind of bringing over there. I'm sorry if anybody didn't see it. Let me see what else is here. Steve's texting me here. Texas Steve here has his information. I think he's giving me a little tip here, maybe. The Excel conference today. CEO MM is giddy over checkmate 90 yards data. Tone of his voice is very bullish. I am re-listening to the conference. PFS, some of these terms I probably don't even know. PFS is $. This data is based on how long patients can be on the medicine. In the money. I would say PSF is in the money. This data is based on how long patients can be on medicine. OS, overall survival, is overall survival rate. Yes. I will listen to the presentation this Saturday. I separated it out. Abstract title, XL092. Conference, ENA 2020, October 24th and 25. Yeah, I think they didn't want either data takeaway from another. All right. CEO MM is so giddy talking about the overall data. If you recall, the XL092 is a new compound, and basically CO MM called it Cabo 2. Simplistic term is new and improved Cabo. I believe already ran investigative trials. Not sure if this is constitute phase 1. The company is great long-term investment. Buy some shares for your kids and let it sit. All right, so that's Steve here. Listening to those conferences that went out today on EXEL. And we're in that. I'm in it. But overall, thank you, Steve, for that research. I'm waiting for him to find the next, the one. You know, you could tell. Like, we had him on it for a guest today. It was fantastic because, you know, sometimes when you know something so well, you speak that language fluently. You know, and talking about the overall survival rates and the first in line drugs and stuff. And, you know, it's great to hear that. It really builds confidence in the research. And that's important in trading. If you don't have the confidence, you probably won't get into a position. You know, what's the sense? And that's why you try to, you know, you learn how to build that confidence. And one of the great, you know, doing your research is that's important. And trusting other people's research is important too. I don't think it's too late. And I just restarted the video now, and I'll probably just go over it again. The video I was just talking before, we were doing some other stuff on the video and discussing some stocks and stuff. But now I'm starting a live show, and I'm just going to incorporate into this video. And we're going to do a research session on current SPACs that I am holding or planning on getting, because we've been doing very well on these. Very, very well on all the SPACs that we've been getting, the warrants and stuff. And I have some that haven't taken off yet. I have some that I want to get into. And, you know, with all that said, I think we're going to get into some good research tonight and make a nice list. I see Facebook here cratering here after hours a bit. Looks like it's down about 10 points. Market's starting to rotate over a little. Let's take a look here. And we had a great trade on Adobe for earnings. We look for a 10 to 12 point pop. We got that. It's kind of drifted back. Apple is kind of selling off after hours. Not much here. FedEx here is acting really well. Some other ones, we'll get into those. But, you know, the market's not doing much right now. Not too much going on. There is some probably news on Facebook, something on Facebook that's caused this market to, or at least Facebook to drop here. So we're going to get into it in just a second here. And I want to start the video back up here because we're talking about ADT here. And ADT came out with a secondary after hours. And I'm trying to bring this chart up a little bit bigger. And you can see it dropped. But look at the volume. 100 shares, 100 shares, 100 shares. This thing's going right back up. This thing is going right back up, in my opinion. So even after hours right now, 727, it's probably, I don't know what the spread is. Looks like 1016 to 1025. I think that's a pretty good buy right down here. I mean, it's not a sexy stock at all, but it is definitely a buy here. Let me see if I could get some here, ADT, and kind of step up. I'm willing to take that shot. I'll just pick up another 200 shares and see if we could get it at 1025. I'm not even going to try to split the bid in the air, so someone's beating me to it. Alright, so I got in 1025, 1024. I just picked up another, what did I get? 100, 200, 300 shares? I got 200 shares. I'm just sending out the alert. All right, third alert in the box here. You can actually see my trade that went through there. So no volume bringing this down. I mean, it's kind of BS. It's kind of a fake out move here, and that's a big move. It's almost $1. It's almost a 10% move. This thing's definitely moving back up to 1050. I mean, there's no volume in there. No volume in the selling. It just artificially, like, kind of just crapped itself because it had no place to go. I'm happy with that. Actually, start the video. All right, we're going to be talking, I don't want to say all that great stuff again, but we're going to start talking about the SPACs now. So today, IPOB, nice pop, and I've been scaling out all the way up until the last pop here above 17. I got out my last trade on the IPOB was, let's see what it is. Sold the last 200, 1732. Up $6 and change, 1732. The high was 1808. So, all right, not bad. You know, I'll take it. It's trading at 1719 now, and it could go much higher. You know, it could go much higher. But these are SPACs that come to market. They're a shell company. It means they have all this cash that they raise, and the object is they're going to merge or bring public a company out there that they're going to use the money to invest in and bring public. Until they do that, that SPAC just kind of trades there, and they hold that money in the trust, you know, an account, and wait for something to happen. And usually these things, when something happens, is when they pop. So IPOB here announced today that they were merging with Open Door. They had the CEO of the, and again, the pedigree or the history or the board and the people involved in the SPAC are that's very, very important in these things, because there's not a lot of history, and it could be a lot of scams out there. But in this case, the guys who brought this SPAC to the table, you know, or brought it public, also brought Space, or the SPAC that acquired Virgin Galactic and made it Space. So they have a good name. They don't know how to do this. So people were waiting for this, and we knew this before this move. So we got in it, you know, at $10 or whatever it was back here, and we've been holding it, waiting for one of these moves, and today's the move, and we get out. So, you know, that's the key to these things, is being in before they move and getting out after they move. And remember, you know, maybe 1 out of 20 could be a moonshot or something like that. It's just, these things are going to pop up, they're going to pop, and they're going to drop. Most of them pop and drop real fast, unless they have a good name or a good board behind it and really, you know, comes out of the gate with something nice. white chocolate here in the house. I was thinking about that today. I was actually thinking about that. I said I have a whole line now. I said, but I'm not going to go into it until the time is right. Zouch here. All right, so we're out of that, and the warrants here is another way to go. I think a lot of people are starting to see that the warrants are the way to go. You get bigger bangs for the buck, it's cheaper. And you're involved with almost like a penny stock, but you're involved with a company that has the potential to not be it's an interesting concept how they get these warrants. And warrants are you trade them just like you would trade the stock, and you could call them an option. They're really options, long-term options. But you're never going to hold them to the end. You're going to trade them. So you're going to look for a similar move. When the underlying stock moves up, the warrants are going to move up, and they tend to move up in greater percentages. So we've been concentrating on the warrants, buying more and being able. I had bought both the IPOB and the IPOB.ws, which are the warrants, and that trade is on. So let's talk about some new ones. And in the room here at Day Trading Radio chat room, if you have any SPACs you want to go over, please send me them in the room or send me links, and I'll go over those. I have a few here that I am in right now. We're going to go over, and one that I like that I think no one else is still under the radar, because I was doing some research earlier on some of these SPACs, and let me see if I could find the article that I was just reading. Hold on. I think it was under Toda. All right. There's a lot of SPACs out there, and just to kind of give you some of these SPACs and some of the SPAC warrants and how they're moving. They're moving before the acquisition, so it's important to find some that are not yet hatching here. So Toda is going to be one of these. Now this is the underlying IPO, which is, the SPAC that should be trading around $10. Slowly grinding up since March, but nothing worth looking at. It's up 40 cents. Not a big move at all. Now look at the warrant here. Warrant. Look at this. 20 cents to 85 cents. So that is, that is a big move. 300 and change percent move here. 300%. So the warrants are really acting really well, and people are looking at them and they're gravitating towards them. So if we do find a good stock or a good SPAC, look at the warrants first. So TOTA is one that's actually moving. It's already moved to 85. I'm not probably going to chase it. It's not my style to find these after they moved. It's my style to find these before they move. So getting back to the one that I like that hasn't moved yet is Scvx. Now here's us back, and I want to play a video on this one. I found this one probably back here in July. Let me see when I got in on this. Let's see. I have to go on the other computer. So I have the warrants here. We got in that and April 30th, May, June. I've been buying this. So April I bought at $9.80. Then I bought some at $9.90. Then I bought the warrants here at 75 cents. And then I bought some more at $9.95 in common. So I have the warrants and the common. As you can see, it hasn't really moved up. It's moved up a little. From my original, so it's up a little. Let's take a look at the Scvx warrants here. Scvx, where's my warrant? That's Scvx. Warrants. So $1.41. So we got in at 75 cents. We're almost doubled up on this. We got in back here, June and July, 75 cents. So it's slowly moving up, and I still think, it's hard to chase it because you're going to say, John, I should have got in with you. I don't think it's too late on this one. I think this one's under the radar still. I think it's under the radar. It's not one I'm finding on lists and stuff. And I want to play you a video fast of these guys here who run this SPAC. So hold on, let me get this set up for you. Because I try to dig down a little bit deeper and get things going here. I need to believe before I get into a setup here. When it came public, cybersecurity. So they're going to be in cybersecurity, and they raised $200 million in the IPO, the SPAC IPO. Now I think I could get into SPAC, and I believe this is the one. I don't want to go into it too much. Because it seems like a longer video, but I want to go over some of the stuff. Let's see what happens here.
Hello, everyone, and welcome to this special CyberWire extended interview. My guests today are Hank Thomas and Mike Doniger, both experienced investors, and they formed a new company called Scvx. Their plan is to bring a funding mechanism known as a SPAC to cybersecurity, which they say is new to the space. A shorter version of this interview originally aired on the January 24th, 2020 edition of the CyberWire Daily Podcast.
I should go there, the shorter version. I want to try shorter version. Would have been perfect.
This CyberWire special edition is made possible by the upcoming Cybersecurity Conference for Executives.
All right, I'm not going to play the whole thing here. I'll put the link where you can listen to it if you want to. Let's see. I want to fast forward.
The last couple of years, the cybersecurity.
I want to try to.
You use that term SPAC. I think that's something that a lot of people may not be familiar with. Can you take us through what does SPAC stand for, and what does it mean?
So a SPAC, Special Purpose Acquisition Corporation, is essentially a blank check company. So what it is we raise a blind pool of capital on Wall Street in the form of an IPO. And by definition, you're not allowed to know what you're going to buy. There's very strict rules behind that. However, you can target a specific space. And so some are more general in what they approach, let's say, agriculture or chemicals or something very broad. We decided to take a very specific approach in targeting this cybersecurity space, and in that created an infrastructure around that with our board, which we'll get into, with Hank and his team, to have a lot of expertise in a very targeted area.
So why a SPAC versus other methods of gathering capital, of making investments?
If you are a target company and you're looking for the next evolution in your financial, lifehood, you have a couple options. You can obviously continue to raise venture capital money or private equity money. The cyberspace in general doesn't like a lot of leverage because they're high growth companies, and so it tends to be more venture capital than private equity. And then as you hit that kind of Series C, Series D part of your evolution, and your valuation starts to get upwards towards that $1 billion range, the venture capital money is not as readily available at that point. And these companies are extremely expensive to continue to grow with large sales forces and getting, a footprint inside that Fortune 1000. As you go to explore the opportunity for more capital, you're now at the stage where you have a couple options. One is you can go the traditional IPO route. The first companies in a vertical, like a CrowdStrike, that are going to demand $10 billion valuation, the IPOs tend to work very well. But if you're in that $1 billion, $2 billion range, it's a little harder to IPO. Your liquidity in your stock, because you're only IPOing a small portion of it, isn't particularly good. And that path to an IPO is a long and arduous one. The other option is obviously to sell your company to a larger company like a CrowdStrike, like a Palo Alto, et cetera. But at that point, you tend to lose control. And even if you go and do a lot of venture capital raising, eventually you start to lose control as well. The SPAC provides an interesting opportunity for a company to maintain control of their future because they'll roll a large portion of their equity. It provides a very liquid currency because the whole company goes public.
It is very liquid. It is like the warrants are not as liquid as the stock, but there's no reason you can't get out once the news is out.
Public on the market, if you believe that the opportunity.
I was able to get out of my warrants, no problem. I mean, the spread wasn't more than 5 cents.
Companies and
normally it's not that bad.
I have to say that when I was doing my own.
So I don't see any issue with the warrant, especially with the volume that comes into it after news. The object is to find those sleepers and get into these sleepers before they move, and then eventually they'll have some kind of news or some type of manipulation in them, and they'll pop $2, $3, $4, and you need to be selling into that. You can't be hoping for, that moonshot, space, IPO or DraftKings or anything like that. You have to take the first bite and just be gone, and that should be your strategy on this. And these are the ones I'm trying to bring to you, are the ones that really haven't moved yet, that you could still get that pop on here. I could see this one popping up above $2.
Slow down our traditional venture investing right now, and to do a SPAC is because once I learned about how it worked, I've discovered that it really provided an opportunity for well,
I don't like that. Like once he learned how to work, so he's never worked them before. He never worked a SPAC before. But
an incubator is to a seed.
He seems very knowledgeable about doing it. But what I like is they have a pretty decent team for cybersecurity on their board.
A ready-baked
like the cybersecurity guy from J.P. Morgan. They got some people, really high people.
In the form of our board. In the form of the investors that are involved in it. And
but
it allows somebody that's at that stage and they don't quite know how to go to do an IPO or quite know how to raise that next round of capital at that later stage beyond venture.
I'll write that one down. I'll come back to that one.
And so that's why I was so excited about getting involved with this.
So for my own understanding, can you sort of lay out for me, tell me if I'm right here, is it that the money that you're raising with the SPAC, for the people who are putting their money in, you're saying to them, this is the team we put together. Have confidence in this team that we are going to take your investment and we're going to go out and do good things with it.
That's right. And we've already had validation on that. We've gone out and done a roadshow. We've spoken to investors. They're extremely excited about the team we've put together, equally as excited about the thesis we've put together, which much of it's available in the prospectus that you can see online. And they know, cybersecurity, InfoSec is on the front page of every newspaper in the world. It's even on non-cybersecurity podcasts, they're talking about cybersecurity.
Right.
Yet there aren't these large platform solutions that most people know about yet, because there really aren't that many larger platform players, because this is still a very new problem. So we think that while the industry is starting to consolidate, we can make some wise choices because of the team we have in place to pull together a really interesting business combination.
Well, let's talk about the team then. What's the group of people that you put together?
Here's the team, and I'm going to let you guys listen to, because it's a big.
Take a 2-second step back and talk about, SPACs have been around for quite some time. Traditionally, maybe they didn't have the greatest name.
I wanted to touch on that. I'm glad you brought it up, because there has been some skepticism traditionally when it came to SPACs. But it seems as though that's been turning lately?
Exactly. So, they've been around over 10 years, maybe even longer. And traditionally, they were used to buy undervalued kind of lost assets, to find some monetization for them, put a whole bunch of leverage on them, get some kind of high free cash flow yield off them. But really over the last 2 or 3 years, what I'll call SPAC 2.0 has really been taking the front page. The Virgin Galactic, spaceship company, Clarion, there's been a number of really kind of blue chip SPACs recently. And so back to your earlier question, when we were saying, okay, if I'm going to pause my career and I'm 20 years Wall Street veteran, and do this full time, I'm not doing it to do some small, rinky dink, buy a lost asset. We wanted to do a blue chip SPAC, and so that's why we teamed up with Credit Suisse, has our sole banker. That's why we use Skadden Arps, has one of the best legal firms. That's why we teamed up with the hedge fund Hudson Bay as a capital partner. And in that, we decided to put together a really robust board. Not all these SPACs have robust boards, but we really, I think, went over the top purposely in designing that team. And to your question, so that team consists of Senator Coates, director, was our former director of national intelligence. This is the first thing he's doing since he left his job in August. And, obviously ran the NSA, ran the CIA. And if anyone knows the threats that our country faces around the corner, we couldn't imagine having, a better steward in that. We have Sunil Yu, who was the recent, I'm going to say head of cybersecurity at Bank of America. I think his official title was mad scientist. Is that right?
That's right. That was his business card.
Yeah. All right. Who's, an author now and very respected in the space. We have Jeff Longhofer, who is the current CISO of the Bank of New York. And we find that particularly interesting that the Bank of New York said okay to him being on this board. And I think, and Hank will go into our thesis more, it's because there is a problem in the cyberspace, and that problem is the massive fragmentation, and the CISOs feel overwhelmed by the amount of vendors they have. And we think this is obviously a solution to that problem, and Jeff is excited to be a part of that. And we have Vivian Sheklast, who was the head of Goldman's technology procurement and a kind of life Goldman steward. She's also on the board of Sallie Mae, and provides a roundabout public company experience. And
as you can see, they're that's something that caught my attention, is the way he came out and approached his how their SPAC is formed and stuff. And I think it's just a matter of time before they announce that, and it seems like they have a good team behind them. And I don't know, there's always risks involved, but the warrants here, $1.41. I mean, they're not 50 cents, but they've been consolidating here under $2 for a while. The IPOB, the IPOB warrants were always around $3 and change. It looks like finally just got that pop. So, all right, so that's the SCVX. So I have the shares and the warrants on that. Someone in the room here, let's just make sure we get everyone's question here. The SOAC, Sustainable Opportunity Acquisition. Now, I ran across this one. I did run across this one the other day, and I think I mentioned it on the video, and it was about 3 of them I was looking at, and this was one of them, I believe. It sounded a little green to me. Sustainable Opportunity Acquisition. Let's take a look at the warrants on that. Oh, no, it's Green City, too. I was looking at Green City, too. What the hell is this again? SOAC. SOAC warrants are $1.90. They're starting to move already. They're starting to move. These warrants are starting to move. Sustainable Opportunity Acquisition warrants. Now, I think we have to all work together. I hate to throw this in your thing, but I think we all have to dig down. You got to find something that we know that has a good team behind it. There's just so much information to look into. There's a lot of SPACs out there now. Acquisition Corp. I mean, a nice pop here from $1 to $1.90. That's huge. I mean, imagine just getting into a good SPAC like this and putting some money to work. You could double your money in a matter of less than a month on these SPACs. So it's about finding the one that hasn't been really, and maybe this is going higher. I don't know. You have to dig down a little bit deeper. We got to see what they're interested in. If there's any rumors out there, who's the boards? Anybody on the board? Anybody have any history of bringing SPACs, and what's their history? I got to find the best of the best and kind of put a part 2 out there. But it takes a lot of work. To help you get started on that work, though, I want to touch base on if you go to that FinViz chart and you put in a SPAC, and I put in IPOB here, underneath, if you go underneath the chart here, you'll see what it's classified as. And in this case, it'll either be a conglomerate or a shell company. So you click on that, and it's actually going to give you a lot of different shell companies. It'll give you a list. And what I want to do here is, let's take a look at the we're gonna look at the price. Well, let's look at the market cap here. We'll go to the highest market cap down, 17 billion, and that's going to probably bring us to the price. But you're going to notice that some of these were SPACs. Let's take a look at the recent SPACs and some current SPACs. All right, DraftKings, recent SPAC, started at $10, now at $48. LPRO, recent SPAC. Look where it started here. And you guys hear me still okay? Pretty good? Just want to make sure everything's good. All right. A lot of people have been hearing about SHLL, and again, look where they all start: $10. So $10. That's where most of these SPACs are priced in, and then you just have to kind of. So if you go there and put some in, you could find a couple of these. Let's see if we could actually break this down to some that haven't really moved yet. But all the SPACs seem to have been on fire recently. IPOB, we've been in that one. FEAC in that one. List goes on and on. I'm going to see if we can actually look at a SPAC within the last year here. Let's break it down in the last 6 months. Let's take a look at the last quarter. All right, here we go. Here's some SPACs that haven't really moved yet. Foley Acquisition Corp. I mean, there's probably a lot of them now. Look at these. IPOB. JWS. AACQ, Treb. I saw this one the other day. FVAC, that looks interesting. Fortress Value. Fortress. I have Fuse. I did do the Fuse myself. Here, someone brought up the SOAC. Doesn't look bad. What's the story behind it? So here's a few right here. I mean, I would scroll back here. Take your paper and pencil out, and these are. I'm giving you some good potential movers here. Here's one that's pretty starboard. That popped and then pulled back, but that's just brand new here. Is Starboard a hedge fund? Or am I thinking of something else? $10.25. They don't. Now I think, I'm not 100% sure, but I think there is an ETF for SPACs. But I'm not 100% sure. Can anybody confirm that for me as I go through the rest here? ETF SPAC. which kind of takes a basket of SPACs and continues. It's almost like having a CMGI, like I mentioned, the CMGIs of the day. Let me see if there's anything here. SPAC ETF. Coming. It's coming. New data tracking, red hot SPAC market is coming soon. When the IPO market and corresponding resonance IPO EPS heated up over the last market. Deviant's next generation SPAC IPO ETFs. Again, the fund will trade under the ticker SPAC, SPAK. When was this article? August 5th. So this is not coming public yet. But that's something to come down the pipe there. All right. That's cool. All right, so let's go on here. So, again, going back to the... all right, so we're in the room bringing out that one. We did that one. We did that one. So I'm looking at the warrants here at 141 on Scvx. Cybersecurity hasn't moved yet. Now, which one are we in here? Deep Throat. Deep Throat here is like in this Chinese one. Let me find it. It's ESSC. ESSC. That's pretty tight. It's pretty tight. Eaststone acquisition. 5 minute has no action on it whatsoever. All right, let's take a look at the warrants now. ESSC warrants. Warrants are actually starting to move up a little. What time is it? 8:04. Oh, I missed it. I might have. You know what? This is only 27 cents. Chinese SPAC. Could be a monster. Could be a monster.
Order submitted.
Oh.
Order filled.
1 minute cell divergence short signal.
No, that's a...
Order submitted. Order submitted.
Is that a...
Order submitted. Order filled.
Oh, it is. It's a sell divergence, and it just took profits. Just took profits. Crushing it again. Now this should have sent out. Now I get to test everything. All right. So the ESSCW. Let's take a look at this one a little bit more. I want to pause the video. I want to dig down deep and see what we can find on this. Videotape this. All right, this is another one we're looking at here. SOAC. And let me go back to the chart here so you can see the chart. These are the warrants at 190. Common shares are trading at 10 and change. And not looking that bad. I mean, of all of these look probably the best. So here's a little update on it and kind of get me, I'm getting into this, just doing a little research here. U.S.-based Sustainable Opportunity Acquisition last week raised $300 million by offering 30 million units at $10. It's listed in the New York Stock Exchange. The company plans to use the proceeds to acquire a company or companies it believes have strong sustainability credentials or that show potential to improve, particularly in relation to environmental issues, including climate change. Oh, all right. It's believed to be the first time SPAC that explicitly incorporates sustainability criteria in its selection process. A completed IPO. Our ambition to combine with a company that is not only good for financial performance but also has the potential to be an industry leader based on environmental, social, and governance criteria. SPAC has 18 months, which you can make an acquisition, return the IPO proceeds to anyone who owns each of the tradable stocks at the time, plus interest. Orlando on the ADT. ADT got hit after hours on a secondary. It's not a dilutive. The shares are already outstanding, and it's not an issue of new shares. So I mean, it's just it got hit on news on very light volume. So I expect it to pop right back up. So just seeing it and happening to be there, taking an opportunity. Leonard has held various roles in both public and private companies, including the CEO and CFO, Chief Restructuring Officer, and Independent Director. He previously worked at Energy Company, Genon, Hewlett Packard Enterprise, Texas Development Transportation, Energy Future Holdings, and Power Generation Company, Lone Star, 2 Generation. Scott Arner, Chairman of SPACs, managed by Northern Pacific Group, a private equity firm, is founded in 2012. A SPAC's operating team shows he helped improve ESG's performance. All right. And I don't know if that's it. Anyway, that's the SPAC, so sustainable. You know, if it does come out, I don't know. I mean, how is it? Did it close up? I didn't see how it closed. How did the ADT here, 1022. All right, didn't really do much. See what happens tomorrow. Yeah, remember they had a nice thing on with Google. Popped. It's pulled back since then. We got in on the pullback, and they just came out with a secondary, which is kind of. So I think we move right back up to $11, or at least up back to where we were. The so I'm going to pass on that. I want to pass on the SOAC. SOAC. I want to pass on that. What's this? Here's JWS. JWS. Blank check company you normally incorporated in the Cayman Islands. It's great. I don't know how I'd like this front page. It's kind of generic. Big ocean behind it. I get it, but let's take a look at who's in it. We seek to capitalize on decades of investment experience of our founders. Barry Sternlicht has spent his career building, operating, and investing in businesses both in private and public markets. Joseph Dowling has deep experience investing in institutional capital of every asset class. Our founders. Founder and chairman. Starwood Capital. Hey, Pixie. How you doing? Well, you know what? Low volume is okay. And again, remember, we're not jumping on board because it's running. We're getting on board while it's quiet. And when it gets running, that's when we're getting off. Sounds like a... I mean, I don't know. I mean, what are they, what sector are they interested in? I'm not seeing too much on this. I mean, keep an eye on it. I don't see the, where they might be interested, where their focus is going to be. We'll write it down. I wrote it down. Well, I didn't look at the warrants here. I'll look at warrants on this one. Not saying it's not. I would like to know what they're into. And I don't. 245. Yeah. I mean, that's interesting. Absolutely. JWS. Not WS here. My mouse froze up here a second. I gotta. Oh, there we go. Oh, come on. So, all right. So the jaws here, JWS, on the list. I just did a lot of research on that. JWS. That's the warrants too. So it's not a. This is not a SPAC, but I do have warrants in the BNGO. I just want to GO here, and it did have a little pop today in the bingo, the Sapphire machine, and who knows what's going to happen with that. This is kind of a. This is a long shot. If anything ever happened with it, I would be thrilled. This is where basically it's trading at 16, 17 cents on the warrants, but this is not a SPAC. So I would pass on that just to kind of update you on that. All right. What else? We got the bingo. All right, bingo. We have Scvx. All right, got some HOFV. HOFV, Hall of Fame Resorts and Entertainment. I actually bought some of these warrants here, but nothing's really happened with this. I might get out of this. This was that football thing. I don't know why I got into this. I have no idea. There's no interest in that for me. Jaws, we got the order in. IPOB is out of that. ECCS. There was some HOV insiders. I did find some information. I want to go to 10 minutes on and see if we could actually see where he talks about a SPAC here.
SPAC last week, right?
Yeah.
What's the plan for it?
All right, here it is.
Would be difficult, I think, for the stock market, and could happen. And if there's a second wave, if this goes wrong, this what I think is the required opening of the country, it's going to be an interesting election for sure, and it's going to impact everything. I mean, we could be in real trouble if this comes back, like real trouble. So,
And just
I think that's a 10% probability, but it's not zero.
yeah.
I'm not a doctor.
Well, you guys just priced SPAC last week, right?
Yeah.
What's the plan for it? Like, what do you intend to do with that SPAC?
So if your viewers don't know, it's a special purpose acquisition company. And basically I said I would do anything but hard assets. I wouldn't do real estate assets in it. So we raised $700 million. We upsized twice. We had $1.5 billion of demand. And our goal is to buy a growth company, something that the market favors today that we think will be worth more.
The only thing I don't like about this is I'm a great reader person, especially when they talk about something that deals with money and stuff. I don't know. I mean, all of a sudden when they asked him about the thing, he kind of looked off and started scratching his face. I'm not calling, but I think there's a little, like, I don't think he knows what the hell's going on. Like, they don't have a plan yet. Let me see what he's. I want to look at this again
Everything. I mean, we could be in real trouble
after when he asked the question.
like real trouble. So
And just
I don't think that, I think that's a 10% probability, but it's not zero.
yeah.
I'm not a doctor.
Well, you guys just priced
He has a little
SPAC last week, right?
He has a little smirk.
What's the plan for it? Like, what do you intend to do with that SPAC?
So if your viewers don't know, it's a special purpose acquisition company. And basically I said I would do anything but hard assets. I wouldn't do real estate assets in it. So we raised $700 million. We upsized twice. We had $1.5 billion of demand. And our goal is to buy a growth company. Something
I don't think he upsized twice. I don't know. But anyway, it's still going to work out.
the market favors today that we think will be worth more in 3, 5, and 10 years.
Does it have to be, is there any tech dimension to it or just any growth company?
Any growth company. I think, you know, if a salmon wants to swim with the stream, you know, and not upstream, the market loves growth. Tech, capital light businesses are clearly in favor. The multiple of a growing revenue stream. One company we're looking at did like 125 million in revenue, then this year will do 250, next year 400. It's sort of tech-enabled platform. It's in mobile. Those are the kinds of things I think the market is loving, and they're not impacted by COVID. So in this case, probably benefiting from COVID. So I think we're going to try to go where the fish are swimming, although I do think having something sexy, if you look at the last 3 big successful SPACs, they're led by DraftKings, which was a huge home run in the public markets, and also, and the other they did what's called a PIPE, which is after the IPO, which was only $250 million, they did a $500 million private placement essentially. So they got scale. We can do that as probably as much as $1 billion alongside our 700 million. So we can have as much as $1.7 billion to buy a company between 2 and 8 billion maybe. And that's to buy a company. It's really an IPO for the company. We're not really buying the company. I'm willing to be a chairman, co-chairman, non-executive chairman, or a board member. My ego isn't in this. I'm trying to find the right company and hopefully somebody that has a desire to access the public markets and take some chips off the table in an extremely volatile world. So that's what we're looking for. And you know, I when I was doing the roadshow, I mentioned a company that my family office invested in called Ear. It was called Doctor Labs. I guess their business was programmable earbuds, and it was started by a fellow from Brown, where I went to school, and they had 6 offers to buy the company for $1 billion. I'm pretty sure he'd already picked out his house, his Ferrari, his Hawaii vacation home. And 3 months later, Apple came out with their earbuds, and the next bid was 0, and they filed. So I think entrepreneurs have to remember that these marks are paper marks in many companies, especially the ones that aren't profitable. And if we can give them a path to a certainty to execution of an IPO, they know they're going to get done, and we can help price them so they don't have a silly IPO discount from the underwriters, and they don't have to do a shoe, which can also be very expensive for the company going public. You know, I think it more than offsets the sponsor equity that we get for putting the company together or the deal together. So we're looking forward to that. It's more the activity of my family office than my firm. It's not related to Starwood. It's related to me. My partner is a fellow named Joe Dowling, who is the CIO of Brown University and the CEO of their pension plan. He was the #1 performing CIO in the country last year, and I think top 10% in 3 over 5 years. And he's a personal friend, and he's going to do a lot of the due diligence work, and I'm just helping find the opportunities for him. We have, I think, 2 years to find a candidate, but hopefully we'll find one very shortly. And, it's sort of fun.
And I'm curious to get your view as someone who has just so much domain expertise in hospitality.
Well,
this has been obviously brutal.
So it looks like that was about it on this SPAC, but that's, you know, we got caught up here. That's pretty good. I'm glad that we were able to get that information out. It looks like it's a winner. You know, but they don't know what they're going to get. They have 2 years, he says, you know, and they hope to do it soon. Any type of news is going to pop just a couple dollars. It's just a matter of being in it at this point and waiting for that. So, I think a win-win either way. All right, I want to stop that video, get this video out, and then work on some other stuff here. I'm just hanging with you guys. We had a little divergence here. Nice double bottom divergence right here. Beautiful one. Very steep. Super steep. It'll be across the board. It'll be on the NASDAQ YM. All right, so let's get this video. I hope you got some information out of that. SPACs going forward. JWS got to be in it on the warrants in the ESSC. That's my low one, the low hanging. I'm not a big fan of that. The SCvx, I'm in on that, pretty big. The FVAC here, which has already made its move. The IPOB, we did that. We crushed that today. Out of that, and still looking for some. Yeah, I have an order in already for tomorrow morning, so I am looking to buy the warrants on JWS. I'm looking to buy the warrants for JWS. And I don't think the stock is out of a bad investment either. Honestly, I don't. I think they're both going to move. This one's still in that $10 range. So, you get a 10% move up here. Gets up to $12. You're still dealing with a good return. It might even move better than the options. You just never, with the warrants, but I don't think so. I think this is under the radar, but we do have a good man at, captain, the man in the ship here. The symbol is JWS, but the warrants are JWS, JWS, and that's the warrants at 246. So that does look really good. And Starwood and all right, and then I think the SCvx. We got to just look at a couple more. I wrote down the SOAC. That's kind of the green one. The PSTH looks very interesting. Pershing Square, it's already running. But the Pershing Square, isn't that P? Let me take a look here. PSTH. Oh, they do have the warrants on this. The warrants are $9 on this. So the warrants just got spun off here at $6. They're trading at $8. No, it's a little, I'm going to stick with the ones we have. I don't know if I'm going to get involved with the Pershing Square. But that's it. Until we get some other ones. I'm not in the there is a lot of people in the SPAC, the SPAQ, I should say. Starting to move back up. Could be interesting too. And the other ones with the electric vehicles. Anyway, let me get this out for everyone. And DayTraderRadio.com to get more information on these and get the alerts.